Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, not a great day for market today. In fact, at this point, not too far away from the low point of the trading session when we look at Nifty 50. So take a look at that. More than 100 points cut at the moment, 0.63% down at 17,738 levels. Remember, it opened higher than 17,800 levels today. But if we really look at the banking pack, that is the one which is outperforming the key indices but has slipped in the last few minutes of trade. Mid caps are the point which are showing real resilience, and after the sell-off that it has seen, now probably a lot of buying coming in that space. 0.8% down and a huge up and a huge outperformance when it comes to the mid-cap universe. An advance decline ratio is in favor of the advances because of the mid-cap participation. Two stocks on my radar in terms of percentage. The biggest fall seen in terms of Divi's Labs. In fact, take a look at that counter. And in perspective, from Friday, it has been falling after the results came out. So there is no relief for that stock. And when it comes to Adani stocks, yes, there has been another day of sell-off, but Adani Ports is right now over 3% up in trade, but nowhere recouping what it has lost over the last week. If you really take a one-week chart and take a look at the Adani Ports stocks, Pavitra.
Oh, absolutely. This one is recovered. But by the way, even if you look at the other names, a lot of them still locked in lower circuit, right? Whether it's transmission, you have Wilmar, Green, all of these are still seeing sharp cuts. So that, of course, that pain, continues. But what's doing well? The FMCG pack led by ITC doing very well. You have Tata Consumer, Marico, all holding up well. ITC, by the way, in the past 5 days is up 12%. So, after the budget came through, of course, it's been surging. SBI was in the red for a better part of the day. It has moved into the green now. Solid show in Q3, so that one doing very well. The pain is really coming through from the metals pack. If you look at it, for this year alone, the metals index has seen, around a 15% cut. I'm talking about the Nifty metal, and these are the kind of cuts that you're seeing today. IT also a little soft, but it has rallied well this year. So, that is what's going on with the IT names. But let's begin Business Lunch with talking about, the big story that we've been tracking for you. It is the Adani Group. And, there have been several updates that came through over the weekend with regard to the Adani Group prices. So, Vivek joins us to bring us up to speed with the latest. Vivek?
Well, good afternoon. That's right. Quite a lot of news flow that we've been tracking, and the news flow continues as far as the entire group is concerned. First, what we'll do is we'll see, what kind of actions have rating agencies taken, while other rating agencies have continued to hold on to their outlook as well as the rating. What S&P has done is that they've lowered the outlook as far as Adani Ports as well as Adani Electricity is concerned, and what they've done is they've lowered the outlook to negative from a stable rating that they had earlier. Also, what the Economic Times is reporting is the fact that Standard Chartered has now stopped lending against Adani dollar bonds amidst the volatility that you're seeing as far as the share prices are concerned. And this is, in the backdrop of similar moves that were undertaken earlier by Credit Suisse as well as Citigroup stocks. Now, another important thing to keep track of as far as the stocks today are concerned is that, when you talk about the F&O space, Adani Ports continues to remain in the F&O band. So no new fresh derivative positions can be taken over here, but Ambuja Cements, it is out of the ban as of today, and fresh derivative positions can be taken over here. You also had SEBI come out and make, a statement, as far as the entire volatility is concerned. What they said is that they have put in place well-defined surveillance measures in order to address volatility as far as the large conglomerate is concerned. We also had banks, that declared results over the weekend actually come out and talk about their exposure. Most of the exposure is well contained. CLSA says SBI's Adani exposure is close to 27,000 crore, 0.88 of the total loan book. Axis Bank's exposure is 7,100 crore, 0.94 of the total loan book. JV partners continue to support. Total has said, French energy major Total, which continues to be an active partner with Adani, has said that, this is all of the investments that they've done has been done in full compliance with the Indian laws. And Adani Wilmar too has said a statement that they will continue to support their Indian associates. Remember, Adani Wilmar partner is Wilmar itself. And when you're talking about the stock price movement, on Friday you saw big recovery as far as the F&O space is concerned. But, most of the cash stocks continue to trade lower, and all of them have been perched at the lower circuit for many consecutive trading sessions.
All right, Vivek, thanks so much for giving us all those details on what's the action building up for today on Adani's group of stocks. And one big concern is definitely their ability to raise more funds basis the comments that have come out of rating agencies, but on the other hand, their partners really backing them at this point. But of course, Adani Ports results is just around the corner and it is in the green today. Now, stock valuation expert Professor Ashwath Damodaran of NYU Stern tells CNBC-TV18 that he values Adani Enterprises at 945 rupees with very generous margin and revenue assumptions. Listen into the excerpts from the exclusive conversation that we had with CNBC-TV18's Lata Venkatesh.
What I see in this business is a company that invests in infrastructure investments, which have long gestation periods, require huge capital expenditures upfront, and are not that profitable. It's the nature of the business. So when I approached the valuation of Adani Enterprises, that's what I brought to the game. I had to bring in the fact that this is not a business that can generate 30% margins or 40% margins. You're going to be lucky to get to 6 or 7% margins. The global average for infrastructure companies is about 4.8 to 5%. So at 7%, I'm already pushing the limit on what those margins will be. I actually give them 30% revenue growth for the next 5 years. I actually assume that they'd be even, part of it is from existing reinvestments starting to pay off, and infrastructure investments take a while to pay off. So I actually gave them 30% revenue growth for the next 5 years and pushed the margins over time to 7%. Right now, they're at 3.6% margins, so that's almost a doubling of the margins. That part of the Hindenburg report, I could not quite get why they were making such a big deal. I don't think it's the market cap that's been pushing the debt. This is something that predates the jump in the market cap. This is just it's in the company's DNA. They don't like to issue equity. That's the reality. And it's like pulling teeth to get them to even give up 1%, 2% of their holding. And I think, in a sense, it's a bit of a tragedy, because I think this is a company with competencies, which has something really good to bring to the economy. And I think in the zeal to preserve control, they might be risking all those core competencies.
Right, and remember, you can catch this full conversation with Ashwath Damodaran today at 3:30 p.m. right here only on CNBC TV 18. But speaking of the Adani Group crisis, another update is that chaos really continues over the crisis led by protests, and they're being led by the Congress and are taking place all over the country. So the opposition continues to demand a joint parliamentary committee probe and a Supreme Court monitored probe into the Adani stock rout. So the opposition has also demanded a discussion in the parliament, but both the Lok Sabha as well as the Rajya Sabha have been adjourned until 2 p.m. today.
All right, so that's all the action around the Adani group of companies and the developments there. With that, we'll slip into a short breather on Business Lunch, but on the other side, relief. Hey
guys, welcome back. You're still tuned into Business Lunch on CNBC TV 18, and some stocks which are really surging include Vodafone Idea, which is up 23%, and you also have Indus Towers. This is after we saw some relief coming in for Vodafone Idea. The government has approved conversion of AGR dues worth over 16,000 crore rupees into equity. So the conversion of shares will be done at 10 rupees per share. And post this, the government will hold 35.8% stake in the company. And with that, it will become the largest shareholder in Vodafone Idea. So let's listen in to what the Finance Minister, the Divestment Secretary, as well as the Finance Secretary had to say on this.
उनका डेट को हम नहीं ले रहे, वो जो सरकार को देना है,
ड्यूज की बात कर रहा हूं।
हाँ, वो सरकार को जो देना है, वो सुप्रीम कोर्ट में चलते, वो सब होने के बाद और कैबिनेट के अप्रूवल लेने के बाद आप कंपनी हमें जो हमारी ड्यू है वो दे नहीं पा रही हो इस कगार में, इसीलिए हम कंपनी का शेयर ले रहे हैं, मतलब कंपनी में हिस्सेदार हो गए हैं, जिससे व्हेन कंपनी कमाई बढ़ेगी हमारे अपने भी मिलेगा.
Here the dues were not due to the banks but due to the government, and the company was just not in a position to pay it. It was offered as a general course, as a sectoral package to give a relief to the industry. So now, this is where the things are. So it's a question of, supporting a sector.
This is an exceptional situation. This is not, these shares will not be held by Ministry of Telecom. They'll be held by the Department of Investment Promotion and Asset Management as a minority holding in the manner that they still hold shares, for example, in ITC, in Axis Bank through the SUTI. So there are residual situations. When UTI was rescued, the government ended up holding shares in a number of private sector companies. So it is in that manner as a minority shareholding managed by the Department of Investment and Asset Promotion. It's not in any way a PSU or, first of all, even the stakes are much lower, but there is no intention of running it as it's an investment transaction.
All right. So as the government agencies have been explaining that this is a call for really saving the industry, the telecom sector, and that's reflective on not just Vodafone Idea stock because of the kind of relief it's got on AGR dues with the conversion, but also take a look at Indus Tower stock. Remember, this Indus Tower is the tower infrastructure company, and it needs to have a tenancy of 3 for it to be operational well and to make sense in terms of the business feasibility, and therefore the survival of Vodafone Idea is very, very important for the telecom sector on the whole. Also, Suven Pharma's numbers were flashing on your screens right now. Profit drop, revenue drop, as well as the EBITDA drop. We'll take it up on the next segment. It's time for a short